Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the macro view for BTC, taking a look at what's been going on with the buying, the selling, on-chain metrics, taking a look at the charts, what's been going on from an Elliott wave theory, smart money concepts point of view. Now, as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. If you haven't yet joined us in Discord, check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not check it out? Let's make a start with this one though, right? Let's jump right down straight into the on-chain data. So what we're going to do is we're just going to give this a quick review and get everyone up to speed with what's been going on over the last few days. So as we can kind of see, top right hand corner, we have inflows and outflows for 2023. This is basically everything from the 1st of January through to yesterday, which was the 14th of April. Okay, so we can see 3.07 million or 3.0701 million Bitcoin going onto the exchanges and 3.0460 million coming off the exchanges, which basically means 24,000 Bitcoin has gone to exchanges and stayed there. And we can argue that this is more about people waiting to sell, or people have been selling more than they have been kind of buying and accumulating and taking off the exchanges. Now, obviously, this is not a perfect or an exact science, because essentially what we're saying here is we look at inflows as the supply line and the outflows as the demand line. It's not perfect, but it gives you a bit of an idea and a bit of a steer as to kind of what's going on. This is actually reasonably well balanced. It's not overly bearish and it's not bullish either. It's very, very neutral, right? Basically, any kind of demand or any kind of people coming in to try to buy Bitcoin and take it away from the exchanges is being met by pretty decent amount of supply, okay? And therefore, there's a bit of a balance going on. We can also see this with the BTC exchange balance, where it was coming off the exchanges during FTX and kind of all the kind of fear around exchanges, all the way through till the end of 2022. Then we started seeing it going back onto the exchanges and just kind of grinding its way back upwards. This basically means more Bitcoin's been flowing towards the exchanges than has been coming away. And again, that looks like a bearish situation to be in. But ultimately, it's reasonably neutral. It's not a massive spike to the upside, but it is a spike to the upside nonetheless. Now, the Bitcoin exchange net change, which is a 30-day average, each one of these bars on this graph is a 30-day average of the difference between the inflows and the outflows. So in this example here, since the 1st of January, it's 24,000. This shows you what the difference is over a 30-day period. This gives us a bit of a macro view as to whether or not over a longer period of time, things have been bearish or bullish. And actually, for the most part, you can see that there's been pockets where there's a lot more inflows, and then there's pockets where it's actually quite flat, right? And at the moment, we're pretty flat. In the last 30 days, it isn't really noteworthy, okay? This basically tells us that we're not bullish, we're not bearish, it's just flat neutral, okay? So let's move on. As we take a look at those inflows, we can take a look at them on a day-by-day line graph, inflows, outflows. And we can, of course, compare this to the previous bullish market, right? Which was basically the 1st of January 2019. Through to the 14th of April 2019. So like for like time period wise, just different years, we can note that there were 3.0701 million going onto the exchanges in 2023 and 3.0460 million coming off the exchanges in 2023. But when we take a look at that previous bullish market, we can see that it was significantly higher volumes that were being pushed through in that previous bullish market. 5.0699 million going on and 5.0534 million coming off. Now, we'll note that this is a very similar setup. It's very similar in the way that it was neutral. Okay, it wasn't a massive amount of inflows, wasn't a massive amount of outflows. It was pretty much equal supply and demand, right? The main difference is we're about 2 million Bitcoin short now than we were previously in that previous bullish market. So we are short pretty significant volume when it comes to the Bitcoin kind of going on and off the exchanges. Now, there's a lot of speculation as to why this might be. There's definitely a lot of nervous smart money or big funds like institutional investors, they're very nervous. We've got regulations, we've got economic crisis around the world, and there's lots of reasons not to want to be on a risky asset. You don't want to be invested in a risky asset like Bitcoin. And you've got high interest rates that are continuing to increase over in the States, which means potentially they're earning a pretty healthy yield just by keeping their fiat in a bank, for example. And considering the big banks are being protected, it makes sense that some of these wealthier institutional players and investors are actually just holding off and waiting for bigger crashes in the markets, whether that's the stock market, whether that's the crypto market, and actually they're just in a capital preservation mode, right? Basically just preserve that capital and wait whilst earning a pretty healthy yield from the banks. So at the moment, when we see these kind of volumes differences, it is a little scary, and we do know why. Oh, we don't know why, but we know that we can see exactly where the money isn't really coming from. We know who's buying and we know who is selling, specifically as we have that balanced market. But it is a bit alarming when we have about 2 million, which is about 40% reduction in volume over that period of time. So let's go ahead and take a look at the wallet counts, right? So if we're seeing a low volume, where is the volume actually coming from? And it's really just retail investors. And this is the usual trick that retail fall for. It's basically every time there's a dip, there's a bull market starts afterwards, right? We actually see this more as a bear market rally. We've been talking about this for a while. Obviously, we were talking about expecting bear market rallies and being able to kind of capitalize in on that. Now, admittedly, it went up a little bit further than expected, but nonetheless, a bear market rally is what I see this. And it has pushed a lot of people into the FOMO mode, which I think is by intention. Specifically, when we take a look at smart money concepts, we don't see anything else other than manipulation dragging that price of Bitcoin up, specifically on the lower volume side of things. So Bitcoin dust, over 0.01 Bitcoin per wallet, has taken a bit of a dive. These are most vulnerable retail investors, so it's good to see these guys taking profits, but they haven't really taken huge amounts. We basically go from 11,798,000 wallets down to 11,735,000 wallets. Okay, and we can see that right in there. Now, as we go up into the retail investors, we can see that Bitcoin Krill, which is basically over 0.1 Bitcoin, and Bitcoin Shrimps, which is over 1 Bitcoin per wallet, is on the increase. FOMO is hitting these guys hard. They're missing out on something. I'm just not sure what it is that I think they're missing out on. Ultimately, they're paying premium prices right now, and we can see that right in here. So as price is pushing up, these guys continue to FOMO in. But Bitcoin Dolphins, over 10 Bitcoin per wallet, we have seen them coming out of their positions, but they are not alone. When we jump up into the higher sized wallets, I mean, things really do start to stand out. We can see the Bitcoin Sharks over 100 Bitcoin per wallet, and they have been aggressively selling into that 30K area for BTC. And this is no surprise. This is something that we've seen them do quite well, actually. This is probably one of their best trades that I've seen in the history of these wallet counts. So let me show you what their 365-day view looks like. It's this one here. So you can see that basically these sharks, they bought up down here on the 20th of November 2022, aggressively buying up into this move to the upside. Now we can argue, are these Bitcoin sharks the whole reason that we see a significant surge to the upside? As soon as we start pumping, you can see these guys starting to sell into that pump to the upside. We hit this higher range right here at $25,000. They start to be a little bit more aggressive. As we go up into 27, 28, they're starting to really sell off. And then basically we hit 30K, and these guys are then just basically dropping it on the market. And we can see that this is bringing them all the way back down to where they were before we actually started to see any of this pump activity to the upside. So the question becomes, are the sharks on the right side of this trade, or are they on the wrong side of this trade? Because to me, right now, it looks like these guys have done an absolute blinder by buying in before the surge to the upside, or creating the surge to the upside, and now they're coming out and basically leaving retail holding their bags of Bitcoin. So interesting to see what happens next, but these guys are almost right the way back down to where they were in the November area. So we cannot just blindly ignore who is buying and who is selling. This is the fundamental basics of all investing. Supply and demand is pretty much the only things you really need to be paying attention to. And we can see that these guys were basically soaking up a lot of the supply down at the low end, and now they're providing the supply at the high end. You can do the math as to what you think is likely to happen next. Now, as I come back into our wallets here, we can see that, on the 90-day view, it looks like the whales are buying, right? It looks like the whales are buying. That's going to be positive news. At least you would think so, at least on the face of it, if you decide to just cut the data to 90 days like this. However, if we actually go to a 365-day view for our Bitcoin whales, and we actually start to see a very different picture, which is very much that they have been aggressively selling during this entire bear market. They were selling the November bottom, the June bottom, if you remember all those influencers saying that the bottom was in June, only to be misled, and we found ourselves in the bottom in November, which, for the most part, a lot of people are saying, no one could predict a black swan event like FTX. Well, you weren't a part of the cheeky crew, clearly. Nonetheless, obviously, I jest. We obviously knew that there was going to be a lower low because we didn't have the structure to support a bullish market in June, July, and August, and September. And, we don't know what it was going to be that was going to push us over the edge. It could have been a number of different things. FTX was just the one that did take us down into those lows. So we had November lows, right? We could see that in June, the whales were selling those June lows, and we can see November, the whales were selling those November lows. This gives me very much the kind of vibes that we saw back in June, in November, that if the whales were selling the June lows, then I would expect a new lower low because they're not going to be paying premium prices when they were selling at the existing lows. The same concept can be applied here in November. They were aggressively selling those lows in November. So is it hard to believe that they're going to buy back at a higher price? Definitely not going to happen, in my opinion. So what we're looking for here is a downturn in the market. And it could be very, very catastrophic for retail investors, but very profitable for the whale investors. Coming back to our 90-day view, if I can find it right here. So although it looks positive here, it's actually negative across a much bigger macro piece. The Kraken size wallet has also come down a couple of pegs here. So big players basically going from a wallet count of 121 down to 119. Nothing too major, about 20,000 Bitcoin or so. Although, to be fair, it can be a significant amount more. It could be 100,000 Bitcoin going down to 50,000 Bitcoin. It could be, actually, it'd be less than that. It could be 50,000 Bitcoin maybe going down to 9,000 Bitcoin. We don't know what the exact numbers are here. But what we do know is that the Kraken-sized wallet, if I take a look at that on a 365-day view, has been accumulating during this bear market. This is pretty typical of a Kraken-sized wallet. If we take a look at the 2018 bear market, we can see that they were accumulating during this bear market. You can see it right in here. And then they decide that they want to try to bring in some lower prices, and they use this, all these wallets, basically to flood and basically create an imbalance in the supply and the demand, dragging that price down into the lows, right? So the question does become, are the Kraken-sized wallets going to be doing the same as what they did previously, right? They've been accumulating during this bear market, paying all these premium prices. They were buying up here, for example, we can see actually in May 2022, paying 41,000, and then they were buying again at 29,000. They're buying again over here at 21,000. They were buying over here at 20,000. They were buying again up here at 15,000. And most recently, they've been buying again just up here at 28,000. So the question becomes, why are they doing this, and what's the purpose of this wallet, right? Of these wallets, what are they going to be doing? And my expectations are that they want to be controlling the market. They want to dictate the moves of the market like they did back in the previous bear market, dragging us down into lows so that their friends, the Bitcoin whales, can start to accumulate, which obviously they won't do until retail starts selling to them. So you can see the retail size wallets coming down here during this flat period. This orange line is the price action. Bitcoin's price goes sideways whilst retail is selling. So you might be thinking, well, that's going to create an imbalance in the order books, right? If these retail investors are selling, surely price should be going down. Well, that's because there's a balance going on here. During this flat period of time is also when we see a surge in the whale wallets, because there's always a buyer and there's always a seller. You cannot, and this is one of those fundamental basics that everyone needs to understand, is that you cannot expect all wallet counts to go up. Someone has to sell Bitcoin for someone else to buy it. Unless, of course, it's not Bitcoin. If it's a synthetic Bitcoin, then, you can just create as much of that as you want. It's not real Bitcoin. But if you're actually talking Bitcoin, then, of course, we need to be talking about someone buying and someone selling. It's a balanced market. There's a winner, there's a loser. So retail has to sell for whales to come on in here. And that's what happened in 2018. And that's my expectations of what I think is likely to happen in this next kind of, few months or so. I'm expecting retail investors who are yet to come out during this bear market to come out so that our whale investors can come on in. And Kraken sized wallet, well, that might just be what floods the market and brings us down. I'll leave that for you guys to let me know what you think, whether you think that is all just, speculation, or whether you think that is highly probable, bearing in mind, in order for us to move upwards, we're going to have to see that big fund come on in. So when it comes to price action, what's going on? Well, we have higher highs, higher lows. Like I always tend to say, they have a tendency to break them down at some point. My expectation is that we do move down. Can't time the market, but that's my expectation. So on this daily chart, what do we see? Well, we can see here, we still have that potential for a WXYXZ, WXYX and Z. That's still possible. This actually doesn't require a new lower low, which is my preferred option, which would be 11,600 to 18,400. But chances are we probably do have to have a lower low at some point. My big fear is that we have a bigger corrective structure like this taking us down significantly lower, and I think that's going to just be catastrophic for retail, but it is what it is. So that's on the horizon, or one of the possibilities, I should say. From a smart money concepts point of view, what do we see? Well, we see these imbalances in the order books. These, in my opinion, will eventually get filled out, although we do have a bullish structure at the moment on our daily chart here. We're overbought. If I bring this up on our daily chart, we're overbought. On the weekly chart, we are overbought. On the 20-hour, full load, overbought. 16-hour, just coming down from overbought. 12-hour, overbought. 8-hour, coming down quite aggressively from overbought, oversold on the 4-hour, and overbought on the 1-hour. So from a macro standpoint, it does look like we have to have some kind of macro correction. And, targeting out $19,000, $20,000 wouldn't be the worst thing in the world. It would be a nice area of consolidation, but don't think it's too far really from going down into a new lower low. If we do come down here, it does change our characteristic and we'll go back into a bearish state of play. So it's all kind of really for grabs. I think ultimately, though, we are exhausting retail money. We see large players coming out with retail coming in. Ultimately, I think there's a recipe for a big move to the downside. Hopefully within the next few weeks, but it's really hard to say for certain. Let me know what your thoughts are in the comments down below. Really interested to kind of canvass everyone's thoughts and opinions on this one. But ultimately, I think we kind of have no choice but to go down, at least in a healthy correction, more towards that $20,000. Let me know what your thoughts are. If you found this useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, well, why not go ahead and subscribe, tap the bell, select all the notifications, and don't forget to join us down in Discord, linked in the description below. Until the next one, though, guys, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.